Hey, it's Kyle, and today let's talk about an economy with a negative income tax as a way to solve the ineffectiveness of government welfare programs, while at the same time shrinking down an equally inefficient bureaucratic system. A negative income tax is nothing new. It's been around since the 1940s, first propagated by British politician Juliet Rhys-Williams, and later gained widespread interest from economist Milton Friedman. Okay, so what's a negative income tax anyway? Well, it's exactly like it sounds. The US has a progressive income tax, or a positive income tax, where we work and pay a percentage of our earnings to the government. A negative income tax, in effect, means the government pays you. Sounds fun? Well, this is for people who don't make enough. Here's what it is in its simplest form. Let's say the threshold to qualify for a negative income tax is $40,000. So you make $40,000 or less per year, you'll qualify. Then take 50% of the difference from that threshold to what you make. So let's say you make $21,000 per year, you subtract that amount from $40,000 and that equals $19,000. Get 50% of that $19,000 and you'll receive $9,500 from the government. In this example, the max you will receive is $20,000 from the government. That's if you don't work at all. But then again, one criticism of the negative income tax, which Friedman actually admits, is that this might disincentivize people to work. Imagine bumming around all day and receiving $20,000 per year. I wouldn't work either. So let's change some numbers. To qualify for a negative income tax, you need to work. Simple. Produce an income. We have an upper threshold of $40,000. Let's put a floor of $12,000. So the max you can earn from a negative income tax is $40,000 minus your $12,000 income, and then get 50% of that, and you'll receive a max of $14,000 from the government. Of course, we'll have to figure out the exact numbers to get an optimal figure. These are just examples to drive my point. If a negative income tax is implemented, we'll have to replace our current welfare system. This isn't an expansion of government, this is a market replacement for government, which will save a lot of money and reduce the bureaucratic nightmare. We replace dollar for dollar the cost of maintaining our welfare programs to pay for this negative income tax. No new costs or raising taxes. That's why the numbers need to be optimized. What makes our welfare programs inefficient is that they limit choices for people to purchase optimal resources. Studies have found that people are worse off relying on welfare, and it's done a very poor job of lifting people out of poverty. In fact, it incentivizes people to stay on poverty. If people try to get a job, which makes them more independent, if they pass a certain threshold, they lose those welfare benefits. It actually costs more for them to fund their own purchases than receiving it for free if they just don't work at all. For every dollar they make, they lose those free benefits. That's actually a huge tax burden on them. Say a person on welfare starts working and receives $1,800 per month. In some cases, that's above the threshold to be on welfare, so they lose their free benefits, which could add up to $500 in value. That's a stupid 27% tax on the very poor. Good job, guys. A negative income tax removes this cushion and incentivizes people to work and not be punished for it. And you'll need to work to even receive this negative income tax. When people receive this money, they can do whatever they want with it. Unlike welfare, they have a choice to spend it on more optimal resources. Okay, now how is this different from a universal basic income, specifically Andrew Yang's Freedom Dividend, where he promises every American over the age of 18 with a lifetime base income of $1,000 per month by enacting a value-added tax on companies? First, a negative income tax is not an added tax, which, come on, don't we already have enough taxes? A universal income tax gives everyone money, which just screams welfare even more. Our welfare system is already inefficient, and we would just be adding to it. A negative income tax is an optimal replacement for welfare, and it's for only the most vulnerable of Americans. Sure, everyone would like $1,000 per month forever, but that has unintended consequences, such as overall prices for everything going up. Since everyone has more money, why shouldn't vendors raise the prices for everything? A negative income tax combines something liberals and conservatives can both agree on: assistance to the less fortunate and less government bureaucracies. The closest thing we have to a negative income tax in the US is the Earned Income Tax Credit, or EITC. It's based on various factors such as the requirement that someone is working, the amount they make, and number of children in the household. It's even proven to lift people out of poverty more so than other welfare programs. A negative income tax is simply an expansion with replacement components of the inefficiencies of our welfare programs. As always, this needs to be analyzed by our policy wonks and figure out an optimal number where this can really work. I'd love to hear what you guys have to say, so leave a comment down below. Would you want to see a negative income tax? Don't forget to like and share this video. Remember to subscribe and turn on the notification bell so you stay up to date when new videos come out. And lastly, if you want to learn about how our economic system works and how you can optimize it for yourself, read Economics in One Lesson by Henry Hazlitt. I'll leave a link down below. Until next time, be smart with your money.